This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are back from Denver, from Schwab Impact. We are back here at Bloomberg headquarters in New York City. Carol Masser, Tim Stenivek. And I was going to say Friday, but I feel like it's not so Friday when it comes to the equity markets.
Although, if you're long.
Yeah, and we're off our worst levels, Tim.
We are still down 0.6% on the S&P 500, the NASDAQ composite down over 1%. Charlie Peltz going to have a full update in just a minute. But like Carol said, not a Friday if you're long this market.
No, it's looking like we're down, 2.4% for the S&P 500 for the week overall. So we have seen, it feels like a little bit of a change in the narrative. A risk-off week. It saw stocks hitting a tech rout. Tech-heavy NASDAQ 100, by the way, on track for its worst week since April. So we have seen, going up for such a long time, hitting some records. And then as you can see in that chart, for those who are watching on TV and on YouTube, for those who are listening on radio, yeah, we've come off our best levels of the session when it comes to the NASDAQ 100. Keep in mind, it is on track for its worst week since April. Remember back then, Tim? That's when it hit a bear market.
Yeah, so-called Liberation Day. I'm not going to forget that anytime soon. So that's the backdrop for our conversations for the next hour right here on Bloomberg Businessweek Daily. Also our backdrop, everything happening at the nation's airports. What's going on at some of the typically busiest airports because of the government shutdown, the effect on travelers, the U.S. economy, and on the airlines. And
Karin Kimbrough, she's chief economist over at Linked, and she's going to get into the U.S. labor market. This should have been a jobs Friday. It ain't because of the government shutdown, but we're going to see what she is seeing on their platform.
Also, the CEO of Axon Enterprises joins us on earnings, acquisitions, and investors just dumping shares this week.
Yeah, and then Perri Peltz and Matt O'Neill of Can't Look Away, the case against social media. This is a Bloomberg original investigation. It's based on Olivia Carville's reporting about social media and kids and teenagers. You're not going to want to miss this. So that's coming up a little bit later on this hour.
All that ahead on Bloomberg Businessweek Daily over the next hour. First, though, a check on the day's trade and top business stories. He is glued to the terminal, Charlie Pellet.
Thank you very much. We are looking at a down day here. A lot of red on the screen. Not such a great day for the bulls as we've got 2 hours to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all lower. You guys alluded to the weekly numbers, down 2.3% on the S&P 500 index. Here's what's going on right now. We've got the S&P down 41 at 66.78. That is a drop there of 0.6%. Dow Industrials down 174, lower by 0.4%. NASDAQ right now, the composite index down 1.1%. The final stretch of a risk-off week saw stocks hit by a tech rout. Worries about weakening in key areas of the economy, lifting bonds the 10-year. 4.07% with the 2-year, 3.53%. Gold up $30 the ounce, back above 4,000. 4,007 now on spot gold, up 0.8%. West Texas Intermediate crude up 0.6%, 59.78 the ounce, and Bitcoin 59.78 the barrel. We're talking gold here. Black gold right now, WTI up by 0.6%. Bitcoin now higher by 1.4%, 102,500 on Bitcoin. What about those travel stocks as an economic indicator? Expedia Group raising its full-year gross bookings and revenue outlook. Expedia shares surging now by 17.5%. Airbnb also reporting last night stock lower. Airbnb down now by 1.3%. Recapping, S&P down 0.6%. Right now, the S&P is at 66.78. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. We'll be back to Charlie a little bit later on. Hey, listen, I got to say, with what's going on around airlines across America, Tim and I saw it firsthand. We both had trips out of Denver, coming back from Schwab Impact. I was headed to Newark. You were headed to LaGuardia. And we were watching as we were finishing up our
flights
broadcast.
were supposed to leave 10 minutes apart.
Right. And you were like on time.
I was fine.
Everything was fine. Not so for me. At 2:48 p.m. Mountain Time yesterday, my flight from Denver to Newark, this is the text I got. It's got a new departure time due to air traffic control constraints and staffing during the government shutdown that are affecting operations for all of its airlines. I got to say, I ended up with 3 delays that would come my way. They did cite specifically the FAA and the air traffic control staffing shortages. I finally took off almost 8 o'clock from Denver. That was about 10 o'clock our time, 2 hours behind. I'm not alone in this, Tim.
No,
you know that.
You're not. Airlines across the U.S. have canceled flights scheduled for the coming days as the longest government shutdown in history has been snarling air travel and forces thousands of passengers to change their travel plans. Just in the last hour or so, we heard from Transportation Secretary Sean Duffy, who said that U.S. flight cuts could reach 20% if the situation worsens. It's at 10% as of today.
Yeah, all right. So we're watching this closely. I will say last night at Newark, it was so busy, just all these flights that look like people trying to get in. Let's get to Bloomberg TV markets correspondent Norah Mulinda. She follows the markets, but she's also watching the nation's airports for us on this Friday. She's on the ground at Newark Liberty International since early this morning. So Norah, what are you seeing and hearing? Does it feel like there's stress and strain in the system?
Well, lots of disruptions in focus today as we look across the nation, but it is important to put this size and scope into perspective here. So we do have about 3% of flights across the United States that are canceled this today. But of course, this is not as bad as what we've seen, maybe 4 or 5% cancellations during a major weather disruption here. But I mean, here at Newark, I mean, things have been decent. I mean, we've seen some ebbs and flows, of course, in traffic, but I would say largely steady here. About a 5-minute wait if you're headed through security here. Of course, we do have long lines here at security because it is one security line here in Terminal A that leads to all of the airlines. So we have been talking to some people here on the ground, Carol, who've just been discussing and talking about, of course, the frets and anxieties heading into the holiday season as we are just a couple weeks away, and a lot of people anxious about what that could mean for potential flights and delays if this were to continue here.
Yeah, it's kind of what everybody was talking about yesterday in line to get through security was that these TSA agents are not getting paid. They're going to work. They're not getting paid. Our experience over the last week was actually pretty great through TSA, and the agents were extremely helpful and they were courteous, and we were grateful that they were showing up to work, and certainly grateful to the air traffic controllers as well. You mentioned the passengers, Norah. As you mentioned, you've been speaking to some of them. Where are they trying to go? Are they able to get there? How are their spirits? Are things looking kind of okay today?
So there are some passengers that are getting some steady flow. We did see a lot of volume earlier in the day. You know, some of the speculation here being perhaps the fact that people are trying to get early flights just in case there are some delays. But I did talk to one woman in particular, a cosmetic surgeon here that is trying to go from EWR to Barbados, but accidentally was unable to get that flight due to a cancellation and was redirected to JFK Airport for a flight that was actually an hour earlier than what the initial intent was. So, of course, she didn't make that flight either. So very much disgruntled sentiments from some individuals that we were talking about here on the ground. But of course, you did mention, Tim, the workers here. We do have a lot of TSA agents that we are hearing anecdotally here at Newark Liberty Airport that are still coming into work despite the fact that they have not received a paycheck since the government shut down on October 1st.
Yeah, it doesn't seem right, which is why I know you and I, every time we saw a TSA agent, we're like, thank you, thank you, thank you.
What takes longer to get from Newark Liberty International Airport to JFK or to get from New York to Barbados?
I don't know.
That's the question.
That's a good question. Wouldn't we all like to find out, right? All right, Norah, thank you so much. Bloomberg TV markets correspondent Norah Mulinda. She's on the ground at Newark International. All right, we want to stay on airlines, and we're curious about what's going on, you know, at Newark, but around the country, and, you know, ultimately what could be the impact on the carriers themselves, especially if we see a reduced flight schedule. Also on the ground at Newark Liberty International Airport is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson. George, there you are. You just flew in, right?
How you doing?
Hi.
I did. I just came in. Hi. Hello. I just came in from Miami. Yes.
How did it go?
Yeah, it was pretty smooth. Like I would expect when they knocked down, you know, the initial call was 10%. Norah Mulinda said maybe less than that of flights to the 40 most important airports. I'd expect that things would run a little easier. I feel bad for people that had their flights canceled, but I think if you're going to a core market for an airline, and you know, I was coming up from Miami, that's pretty core for United. Airplane was absolutely full. I don't think there was another seat empty on it. They're going to get that traffic through, right? Because that's they're going to look at the most efficient and best profit making flights and make sure they push them through.
George, we are less than 3 weeks away from one of the busiest travel days of the year. That would be the time around Thanksgiving. And I'm wondering if we do see continued government shutdown, these workers not getting paid, if indeed what happens comes true, what Transportation Secretary Sean Duffy said earlier, that we could see up to 20% disruption. What does the holiday season look like for these air carriers?
Yeah, I mean, that's what we're concerned about, right? So we have a report that'll go out Monday on the Bloomberg terminal. Look, we were looking at sort of total seats put into the market during 4Q. 4Q isn't typically a very busy time for the business, right? It's not a high profit season for them. And November is actually the lowest of that season. It's got the least number of seats flown. But it's deceiving because, November is when the business traveler kind of stops, right? I was just down at a conference in Miami. That's about the last conference I think you'll see before we roll into Thanksgiving here in the U.S. So business kind of rolls off here in the middle of the month, and leisure picks up very big, in a big way by the end of the month. So I think if we don't have the government shutdown stopped, Thanksgiving will be an absolute mess because I would expect there'll be even more cancellations. And then you get another ebb between Thanksgiving and Christmas. Hopefully we're not talking about sort of Christmas year-end sort of celebrations, having the government still out by then. I don't think they can make it that long. But
hey, George, just real quickly, when do you start to kind of rewrite some of your, expectations in terms of earnings or revenues, the balance sheets, the financials for the airlines? Does this have to go on for several days, for several weeks before it becomes something material for the big airlines and all of them, really?
Yeah, I think you're right on it, right? I think if we get into Thanksgiving and this is still going on, we're cutting back capacity, then we're going to start to get much more concerned to start rethinking about where profitability, profits, cash flow go for 4Q. Right now, this could even be a slight pickup where airlines sort of knock down their least performing flights and get maybe a little bit of a margin pickup. Maybe profit ebbs a little bit on it, but right now it's not major. Get into Thanksgiving and we've got an issue on it.
George, before we let you go, you were down in Miami. You were there for a conference on corporate jet travel. Just give us an update there. Yeah. It's an area that certainly you and other analysts watch. Those flights not disrupted right now.
No, and that's an advantage of having having your own airplane, private aviation. And one of the reasons people go there is because of that, less security issues. That market continues to stay strong. I'm pretty impressed. We've had earnings this week from Bombardier and Embraer. The backlogs continue they're steady. They're not declining, even as those manufacturers increase the number of airplanes they build. And there's been a number of people that came to private aviation after the pandemic, and it appears they've stuck around. And so that market doing pretty good. I'd say pretty nicely.
All right. Good to know, especially, I guess when we get on our private jet for our next trip. Yeah.
Private jet?
Yeah, George, you have that, right?
I know, George is at Newark, not Teterboro right now, so we know how he got back from Miami.
All right, safe travels to the rest of your way home. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. Of course, George Ferguson there at Newark Airport. Hey, we do want to mention a headline crossing. Oracle, a group of about 20 banks, is providing a roughly $18 billion project finance loan to help fund the construction of a data center campus tied to Oracle, marking the latest mega debt deal to help bankroll the AI, artificial intelligence boom. We know Meta has tapped the debt markets. Alphabet has tapped the debt markets. Shares of Alphabet, the market's been under pressure today. Still, shares of Oracle are down about 3.3%, but Tim, they've bounced off their worst levels of the session.
Yeah, some of the banks mentioned in this Bloomberg piece include BNP Paribas, Goldman Sachs Group, Mitsubishi UFJ Financial Group. Those are administrative agents on the deal. This according to people with knowledge of the matter who asked not to be named discussing a private transaction.
All right, we want to get back to kind of the things that are coming at investors in the U.S. economy. Certainly the economic activity, perhaps out of the airline industry, if it's prolonged, this impact as a result of the government shutdown could impact, and most expect it would if it's a prolonged, even further shutdown in terms of the impact on the U.S. economy. I will say we did get a data point, U.S. consumer sentiment tumbling to near the lowest on record today as the government shutdown weighed on the economy and the outlook, and high prices soured views about personal finances. Consumers perceive pressure on their personal finances from multiple directions and anticipate the labor markets will continue to weaken, Tim, in the future. That's according to Joanne Su, who's director of the survey. So there's concerns about the labor market.
I want to bring in Karin Kimbrough, chief economist at LinkedIn, for a check on the health of the U.S. labor market. She joins us from Dallas. Karin, you have incredible data, real-time data on LinkedIn. This is a source of alternative data today. In one word, how would you describe the state of the labor market in the U.S. right now?
Softening.
Softening.
It's been it's continuing to soften. The data that we have through the end of October tells us that the labor market is just on its continued softening path. And that kind of means there's a little bit of fragility there.
How much? There's a little fragility, and like, where are you seeing the fragility? Especially when we constantly, Tim and I, talk about the K-shaped economy, and we've had, we've seen resilience in the U.S. economy, but a lot of it is, spending by the higher income folks, and it's kind of underlying weakness among low and middle income households. So those higher income Americans continue to drive growth. Are we seeing that disparity in the labor market, that higher paying jobs continuing to hire and lower not, or what are you seeing?
Yeah, actually, it's a little different than that. So I would say there's, as I said, some fragility, but actually some bright spots. So there are sectors, think of like construction, leisure and hospitality, that are hiring. And those are segments that often will hire, hourly workers, lower income workers. So ironically, in some sense, some of the sectors that are doing a little bit better in terms of hiring rates year over year are the ones where we see more hourly salaried workers. So there are bright spots. There are challenges. One thing I would kind of mention is that the story we're telling didn't change appreciably between last month and this month. It's not like it took another huge leg down. It's more like it's kind of continued same softening of decreased hiring rates. Confidence is down. I heard you mention the consumer confidence overall. The confidence we see in workers and their ability to find a job and keep a job is also a little bit weaker now because they can see how competitive the job market is.
What about trends that you're seeing in real time on the LinkedIn platform? Hiring trends. Hiring is down. We know that. What about other trends that you're seeing? What can you tell us?
Yeah, absolutely. So we are also seeing increased mentions of layoffs. And these are, of course, just mentions. These people engaging on the platform talking about it. We're seeing by our own measure of quits, so it mirrors the BLS's measure of quits. We are seeing quits that are also coming down just slightly. So people are kind of staying in place, not quitting as much, and that's usually a sign of a more fragile market. But I think the biggest trend that we're seeing right now is really this fact that every industry seems to be having a different experience. So if you think about what employers are looking for, they're posting jobs on the platform, and they are all really quite a lot of them are looking for skills like AI literacy. So that is one of the fastest growing skills. They want candidates who can come in and actually know how to use AI to increase their efficiency and productivity. So it's not like being scared of it. They're looking to extend their adoption. So 70% increase in jobs that are looking by employers looking for AI skills. We think more than 85% of the members on our platform are in roles that are going to be transformed by AI. So we're in this period of evolution of the job market, but it's going to take some time.
All right, we've got to run. Hey, listen, great stuff, and so appreciate your time on what's supposed to be a monthly jobs report this morning, but right. It's a little bit of a different jobs day, right? Welcome to Bizarro World, everybody. Karin Kimbrough, she's chief economist over at LinkedIn. Hey, coming up, the company best known for its tasers. It's been on fire over the past decade, but caught investors off guard. We'll explain.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all declining right now. Yes, off session lows, but still a lot of red on the screen right now. S&P 500 index on track for a losing week, looking at a loss this week of just about 2.3%. So here's where we stand again, underscoring we're off session lows, but the S&P right now is trading lower by 37 points, 67.83, drop there of 0.5%. The Dow down 144, decline there of 0.3%. NASDAQ Composite Index down by 1.1%. The Russell 2000 Index of small cap shares doing a little bit better, down just 0.2%, but the Mag 7 Index down now by 1.5%. 10-year yield, it is currently yielding 4.07%, with the 2-year 3.53%. Spot gold is up $29 the ounce, holding about 4,000 right now, 4,007 on the precious metal, up by about 0.7%. West Texas Intermediate crude up 0.6%, 59.80 for a barrel of WTI, and we have got Bitcoin right now pushing higher by 1.6%, 102,738 on Bitcoin. Sweetgreen shares after earnings plunging after cutting its full year outlook. The salad chain trading lower now by 10.8%. Also after earnings in the restaurant industry, quick service restaurant Wendy's reporting sales beating estimates by declining less than expected. Wendy's up today by about 0.4%. So again, recapping, the Dow, the S&P, NASDAQ all off session lows, but the S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, here's one stock that's actually bucking the downward trend in today's session. We're talking about Axon Enterprise. It's up about 2.5%. Keep in mind, it dropped about 8% yesterday. Let's lay it out for you, because we did see a bunch of analysts cutting their price targets on Thursday following earnings on Tuesday, late Tuesday. This is according to data compiled by Bloomberg. So 5 changing their price targets. The average change was down 12%. 4 cut price targets by an average of 16%. 1 did raise a price target by about 1%, no changing their investment recommendations. The company, most known for its tasers, but it's been expanding what it does. As I said, reported earnings Tuesday after the close. The stock's been under pressure, but it has had quite a run, up about 26% in the past year, down more than 30% since hitting a record in early August. And I do think it's worth noting the stock is up more than 3,300% since the end of 2015, so roughly the last decade, when it was just a $17 stock. Now it trades at more than $600 a share. I wanted to lay it out because it has had quite a run, and there's been a lot going on at the company.
Well, back with us is Rick Smith. He's the founder and CEO of Axon Enterprise. He joins us from Scottsdale, Arizona. Rick, good to have you back on the program. How is business right now? And the reason we ask is because investors sent the stock down 20% intraday following the latest update and news of a second acquisition. So just give us a business update to sort of start out here.
Yeah, I'd say the business is the strongest it has ever been. I've been a public CEO for like 24 years now, and this is the 5th time we've come in, reported the business with really strong operating results, and then the stock drops. So I just tell our people, don't even look at the stock price. It's going to move around for a bunch of factors. Where we stay focused is building the long-term business, and every previous time it's recovered, and we're going to stick with that playbook. And if you look at where we're growing from some of our new investments, from counter drone and Fusus real-time crime centers and artificial intelligence, our bookings in those areas are up almost triple year over year. And then we just announced 2 new acquisitions that is our entry into the mission-critical voice space, which we think is going to be a huge opportunity over the next decade.
So what are you guys seeing that investors and analysts are not seeing? Because the narrative that you have and your tone doesn't necessarily match the reaction from the street.
Yeah, I mean, part of this, excuse me, was we did have a GAAP operating loss, a tiny one, but that's largely because we have this very unique stock incentive program we call the Exponential Stock Plan, and all of our employees participate. And when the stock does really well and we're hitting our operating targets, stock comp goes up. And so paradoxically, the better the operating business does, the more stock comp goes up, and that was the biggest mover. But if you look at the adjusted EBITDA, that if you take that noise out, we managed to turn in. We got like 7 consecutive quarters over 30% top line growth, And we turned in right at 25% or 24.9 adjusted EBITDA while maintaining the growth rate. And if you listen to our president, who used to be the head of sales, he's very close with the customer. He was pretty bullish on our conference call, telling people we think the fourth quarter is going to be a monster from a bookings perspective. So we're feeling really good.
All right, I want to come back to that monster for the fourth quarter in terms of bookings, but I want to say that, Rick, you get this. You've been a CEO for a long time. When you're kind of priced for perfection, investors can be like, well, wait a minute. Citizens, an investor there, Trevor Walsh, said the company had little room for error in its report amid investors' concerns about valuations. Stock trades at 398 times current earnings, or nearly 94 times future earnings. You've got a $47 billion market cap with projected 2025 earnings of $2.7 billion. So your price to sales, or at least in terms of your market expectations, I mean, there's a lot there that they expect everything to kind of just hit perfectly. There's also concerns about tariffs and the government shutdown. There's also concerns that you just did a second acquisition here less than 2 months after you did that agreement to acquire Prepare, which was an AI-powered emergency communications platform. So why is that valuation, or why is that, market cap versus sales justified?
Well, first, I'm probably going to get a note from my general counsel telling me not to use words like monster when talking about future performance. We're really confident.
I bet. Is your phone going off right now next to you?
Yeah, it probably is. But look, the core business is really strong. GAAP EPS is a really hard way to value the business, because I talked about, the stronger the operating business, the more GAAP EPS gets punished with stock compensation expense. So I think something like looking at a multiple of revenue is probably a little more like going to be a little more instructive. But look, yes, we are valued as a growing company that's got to continue to deliver. And we've been delivering. I think we've had, like I said, 7 quarters of over 30% growth. And it's our job as a management team to keep delivering on that. And, if the stock takes a breather, that's kind of outside our control. And I'm an optimist. It creates a great entry point for some of our long-term investors. And we're just going to keep chugging away, working on the business to make sure we keep growing. And those 2 new acquisitions, they're a big piece of it. We made a very strategic move to move into mission-critical voice. We think AI plus voice now is a very magical moment. And there's a lot of AI hype out there. But look, 10% of our core business bookings this year are going to be on our AI services. So we're really delivering value to our customers. And we see doing that in 911 call centers and then extending across, any sort of mission critical voice communication is going to be a huge business. And we found 2 very complementary businesses. Prepared allows us to go fast into any 911 call center. And then Carbyne allows those customers to then go deep and get out of the business of running all the hardware and move their entire 911 infrastructure to the cloud. And those 2 together, we think, are like chocolate and peanut butter. It's going to be a great combo.
Well, I do want to ask you about those monster bookings for the fourth quarter. But having said that, tell us about, you said 10% of the bookings this year are going to be on AI services. How much is still tasers? Like, give us an idea of what the business is today and kind of where you guys are positioning it, especially as you take on these acquisitions.
Got it. Well, I'm terrible at details, but I can tell you the taser business it continues to grow, even though it is a fairly mature business in the U.S., where the real opportunity is our new Taser 10. For the first time, we have a weapon that some of our customers in Europe are saying is a better weapon for their officers than even a handgun. And if we can prove that out this winter, we'll be testing it above the Arctic Circle in heavy, cold conditions with heavy clothing, which is historically been our Achilles heel. If we succeed there, we could see Taser really become a driving force across Europe and the rest of the world outside of the U.S. So even though it's been our core business from the beginning, Taser, we think, could be the growth engine that pulls body cameras, drones, AI, and all our other services right along with it.
Well, let's talk about those other services, because if I go back into your earnings and look at 2017, connected devices accounted for close to 70% of your total revenue. Software and services was just over 30% of revenue. If we fast forward to just in recent years, last year, that pretty much flipped, where connected devices was 40% and software and services is now close to 61% of your business. How big does software and services get? What's the ultimate goal there?
Well, that's sort of like asking me which of my children is my favorite. I love them all.
But I mean, one of those has a higher margin, right?
Oh, yeah, one has a higher margin, but when you can do hardware and software together, when you can do body cameras, drones, in-car cameras, and the software layer, you can just do so much more magical things for the customer than if you're a pure software play. So yeah, investors love the software revenue and margins, and so do we, but the hardware is also growing and really contributing, and it's when you bring it all together that we think the magic happens, and that's our real competitive advantage.
Hey, one of the things I want to ask you about is there's been a bunch of reporting. There was a story about Flock Safety, which is one of your competitors, to be fair. And what's interesting is, I guess, you guys are all doing deals with the Amazon Ring and this camera. And, you know, footage is certainly being shared with law enforcement, whether it's ICE and others. Again, there's a lot of reporting that's being done about this. And at the same time, some community backlash. So are you concerned about community pushback as we have more and more surveillance that is out there, and that is a big part of your business?
So that's one reason we're really proud of the approach we take. We have an Equity and Ethics Advisory Council that is comprised of people from communities of concern, particularly Black and brown communities, right? If we're really talking about over-policing, I think that's the communities of most concern. And so all of our approaches, we run through this ethics review up front with people that are naturally very concerned and skeptical on these issues, and we build safeguards in that help minimize the risk of abuse while maximizing the opportunity. Look, when a private consumer buys a camera to keep their home safe, they're buying it not to watch their dog when they're at work. They want to stop criminals from stealing their stuff, breaking into their house. I actually had a vehicle stolen years ago, and it took me days to get the video from my home security system to the police. What we're doing with Ring, and by the way, we encourage open sharing standards, like Ring is sharing with our competitors. We openly share on a reciprocal basis with our competitors. We think this is like doing the right thing. With all these cameras out there, we should be using them to deter crime and criminal activity. And we think you can do that without having to track everybody, where they go to in their personal lives. We're talking about detecting dangerous criminal acts and deterring those acts in the first place.
So that's with a lot of local law enforcement agencies. And I'm curious about the conversations that you have at the federal level with the Department of Homeland Security, for example, and the way that their officers do or do not use your products. What are the conversations that you have at the federal level with DHS?
Yep, we certainly work with the federal agencies as well. And I think where there is some controversy is like, look, people have different perspectives in different states and in different cities, and our system is built so they're like, hey, if you are, a city in a very deep progressive area, you can choose who and how you share your data. And look, if you're in a border town in a red state and you want to be more collaborative with those federal agencies, one thing I'll tell you, it's not our position to try to dictate how government customers, and that's who we sell to. A private corporation shouldn't be telling government how to use their own data. But what we do is we enable them to make decisions so those elected officials can be responsive to their voters and we can be responsive to their communities.
One last question. 2 acquisitions in as many months. Is there more to come?
We're probably going to take a little breather here.
Okay.
We were not expecting when we went into this. We thought we would make 1 acquisition, but we found that these 2 were really so complementary that, sometimes you got to move quickly when opportunity knocks. And so, this was unexpected, but we're really excited about it.
All right. Totally get that. Rick, thank you so much. As always, love checking in with you. Rick Smith. He is founder and CEO of Axon Enterprise, joining us there from, where is he?
He's in Arizona.
He is in Arizona.
It's nice and warm there.
Scottsdale.
Yeah.
Yeah. You know where else it was warm?
Where, Denver?
Denver.
It was warm in Denver.
It was probably warmer there than it was here in New York.
It's getting warmer here in New York right now if you're an equity trader, because stocks are actually off their worst levels of the day.
We're actually moving up towards our best levels of the session. So how about that after a week where we've seen basically a risk-off trade? Hey, speaking of the trade, let's head on over to Charlie Peltz for another check on the Friday session. Charlie.
Here's what's going on. We do have the Dow, the S&P, NASDAQ, as you guys pointed out, well off session lows right now, but still looking red on the the screen on the week, looking at a loss of roughly 2%, but the S&P right now trading lower by 24 points, 66.96 where we stand right now. We got the S&P down by roughly 0.4%. Dow Industrials now lower by 69, drop there of 0.1%. NASDAQ down 0.8%. And that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. I want to bring you now to Capitol Hill, where Senate Minority Leader Chuck Schumer is making comments on the government shutdown.
Negotiating longer-term solutions to health care costs. Let's do all three. I've spoken with my caucus, and Democrats are offering a very simple compromise. Democrats are ready to clear the way to quickly pass a government funding bill that includes health care affordability. Leader Thune just needs to add a clean one-year extension of the ACA tax credits to the CR so that we can immediately address rising health care costs. That's not a negotiation. It's an extension of current law, something we do all the time around here, as we all know. But we also offer this. Let's create a bipartisan committee that will continue negotiations after the government reopens on reforms, ahead of next year's enrollment period, to provide long-term certainty that health care costs will be more affordable. This proposal reopens the government and ensures working families who are shopping right now for their health care get certainty and financial relief. While open enrollment has begun, insurers can update their rates after we pass a simple extension of the tax credits. With this approach, we do not negotiate health care in the shutdown, as Leader Thune has maintained he wishes, and the American people get the tax credit extension they want. That is what many of our Republican colleagues have floated over the last 6 weeks as a compromise, a one-year tax credit extension and reforms to the credit beyond that. We will agree with the Republican request not to start negotiations until after the government reopens. All Republicans have to do is say yes to extend current law for 1 year. It makes sense. And since what we're proposing is only a simple extension of current law, the Senate could do this within a few hours. This is a reasonable offer that reopens the government, deals with health care affordability, and begins a process of negotiating reforms to the ACA tax credits for the future. Now, the ball is in the Republicans' court. We need Republicans to just say yes. I yield to Senator Peters.
Thank you, Leader Schumer.
Senator from Michigan.
Thank you, Madam President. Madam President, Republicans.
All right, folks, taking it to the floor of the Senate there. You are listening and watching Bloomberg Businessweek Daily. Carol Master along with Tim Stanovic. You just heard from Senate Minority Leader Chuck Schumer with a proposal to end the government shutdown, now the longest in history, in U.S. history, 38 days and counting. The proposal reaching out to Senate Majority Leader John Thune, saying he needs to add an extension of the ACA. We're talking about the Affordable Care Act, ACA subsidy, to stop the gap, or to a stopgap. Yeah. So that's what he's looking. And he's basically saying the ball now is in the Republicans' court, but this is the back and forth that we have seen.
Yeah. Meantime,
or not seen really much of.
Yeah. I mean, he did say earlier this week, too, that he was not going to negotiate in public. He also said that, he spoke to the press this after the election earlier this week. But here he is out with his proposal, out with Democrats' proposal. Meantime, Carol, stocks off their worst levels of the day. In fact, at their best levels of the day. The S&P 500 down only 0.2%. The NASDAQ composite down only 0.7%.
We will continue to monitor. And I will say we had very much a risk-off trade today. Now, most names in the S&P 500 are higher. All right, we want to switch gears for a moment. Something that we've been talking about a lot here at Bloomberg. It is Can't Look Away, The Dangers of Social Media. It is a documentary that follows a team of lawyers taking on the big tech giants, advocating for families whose children have been deeply impacted by social media. Now, the original reporting of Bloomberg News investigative reporter Olivia Carville is throughout this film, but there's a lot more reporting too as well. The Bloomberg original investigation exposing the real-world consequences of harmful social media algorithms. We've got a clip of the documentary, and we're hoping that we can actually share it with everybody. It's a little bit of a Friday here after a very busy week. Here we have it. This, folks, can't look away, the dangers of social media.
These companies have been gaslighting us for years.
This is all about money.
The purpose of all commercial ventures is to create a demand.
Our children are the casualties.
We need to take back the power from these companies.
They created a dangerous situation and then manipulated these kids.
They know the levels of addiction, sexual abuse. They know the levels of suicide. They're not showing our kids what they want to see. They're showing you what they can't look away from.
And that is the Bloomberg Original Investigation. Can't look away, the case against social media, which is now available across Bloomberg platforms. Perri, Peltz, and Matt O'Neill are the directors and producers of the documentary, and they join us here in studio. Welcome, welcome to both of you. I got to say, we've talked to Olivia a lot about her reporting. We know you did as well. Perri, let me start with you. When you guys decided, I don't know, I guess when you first started reading her reporting, what struck you?
What struck us, and first of all, thank you both for having us. We really appreciate it. What struck us is that what's happening is these companies are looking at families, at kids and parents, and putting the blame on them. This is actually a public health crisis, and there's nothing short of that. And I think that Olivia's reporting really speaks to the fact that this is an algorithm problem. Mm-hmm. It's not a bad parenting. It's not a bad kids issue.
Yeah, the big question that I have as a parent, and in a world where we're surrounded by this stuff, Matt, is what is the solution here? Because these companies don't necessarily have the incentive to get us to look away.
Well, I think the first part of the solution is exactly what we're doing, which is starting a conversation. Because a lot of these things, when we started this reporting, we had no idea. I had this vague sense that social media was bad. I'm a parent. I have 2 young boys.
We talk about it so much, like we understand like the problems of social media.
But what I didn't realize was that social media algorithms were feeding suicidation to children, body dysmorphia to children, that kids are being targeted with the absolute worst things on the internet, and it's relentless.
Unpack that. What do you mean by that?
Well, what happens is that these algorithms start off in a way, if someone lingers on a sad moment because they broke up with a girlfriend or a boyfriend, the algorithm catches that and it goes into what some people have called a TikTok hole, where it continues to feed more and more sad content that goes deeper and deeper. There's a whistleblower in the film that actually explains this in more detail who used to work at TikTok.
Well, this is what's interesting, Perri, right? It's not just about what you search on. It's basically what you linger on. And the social media companies, and we're so careful when we talk about this because it's alleged, but this is where the whistleblowers come in and provide some insight about what the companies actually knew.
Yeah, the whistleblowers, as well as internal documentation from these companies. What they're prioritizing is having kids stay on these platforms, engagement. They're not prioritizing safety. So what happens is they bring in neuroscientists, they bring in behavioral scientists to actually program these algorithms so that kids stay on as long as possible. And thus the title, Can't Look Away From. They're being fed the material that they actually can't look away from.
Because that's good for business. Like I said, the incentives are not aligned with getting kids not to look at this stuff. If you show them what they don't want to see, they're going to do something else. We live in an attention economy. So is there a solution in a world where the incentives don't match from a public health perspective?
The incentives have got to change because we right now, unfortunately, have a legal system in Section 230 that protects these companies in a profound way. It treats them as passive pipelines. They are not passive pipelines. Algorithms are company driven.
So what that essentially says, Section 230, is that companies, these social media platforms, are not responsible for the content that's on their platforms.
That's exactly right. They are treating them like bulletin boards, which is if you go back historically to 1996, before social media was even around, and you had these sites that were more bulletin board driven, they would say, it's okay, you can post what you want. The company is not responsible. But that's not what our lawyers would argue, the lawyers that we follow in this film, is what's happening here.
Matt, talk to us about the lawyers, because they really are, when you go up against big tech, you're talking about high-powered, expensive lawyers. This group of lawyers, it's hard not to be impressed by them. And what they ultimately figured out was the argument to do here.
It's an incredible collection of lawyers led by Matt Bergman, also Laura Marquez Garrett, who was that corner office big firm lawyer who left because of what she saw happening with social media and her concern for her own children. What Matt and Laura and the other lawyers of the Social Media Victims Law Center came up with is a novel legal approach which holds holds the companies responsible under product liability law instead of under the idea of Section 230, where it's the content.
Is that promising?
Well, it's made its way through the courts. Snap, in the case that's followed in the film, tries to get it dismissed with Section 230, and they successfully argue and give these families a victory, the first of its kind, that they can be held responsible under product liability law, and they've moved to discovery, and that case is making its way through California.
So when we talk about product liability, you know, Perri, I think of things like the tobacco lawsuits. And this is what you can think about, right? And I think about so many products that are out there right now that are facing a lot of scrutiny.
Well, let's go back to tobacco, to your point. How about opioids? It is another page out of the same playbook, which is basically to blame, in this case, the parents and the kids, and to not hold these companies and the companies to say they're abusing good products. That is not what we are, at least that's not what the reporting is suggesting. This is very, very different. These are algorithms that need to be changed.
I want to just mention, because when you do a documentary and we're at the high level and sometimes we have headlines, you have to remember that there are people, right? And you guys tell these stories. Olivia told these stories, whether it's Alexander Neville, who died because of taking a pill laced with fentanyl that he got on Snapchat. Englyn Roberts died after she copied a strangulation video she saw on Instagram. It was in her feed. Jordan DeMay, 6 hours from initial contact by who he thought was a young woman, but wasn't, but was rather a sextortionist. He killed himself. I mean, telling these stories. I mean, in the film, you're in the bedrooms, you're talking to the parents, Matt. There's a lot of people that were impacted, and there are thousands of cases.
This is just the tip of the iceberg, and I appreciate what you were doing there because you're saying their names. I'll add Mason Eden to that, a boy who died by suicide after a breakup because he went down one of these TikTok holes where he was being fed content that actually told him to blow his brains out with a shotgun. Actually, these are the shocking sorts of things that many of us adults don't know are happening on social media, and these parents are taking the most incredible tragedy in their lives and turning it into change. Yes, they're holding these companies liable and suing them. What they're looking for is not necessarily monetary damages. It's for real changes to how these companies work. You asked about a solution before. If Instagram can figure out that I want a lawnmower before I know I want a lawnmower, or that I need a hair cream to try to grow my hair back, it can figure out how not to send content that promotes suicide to children.
Because you know what? My understanding, and I know you and I, we did a panel here, and we did a discussion. What is it TikTok in China do?
It's a great question, because TikTok, owned by ByteDance, the similar app in China, has a shut-off time at night so that children can't access it. Instead of promoting whatever the kids are lingering on, it actually promotes practicing your musical instrument and doing math problem sets.
Amazing. Perri, what do you hope people run with after this film? We've only got about a minute or so left. What do you hope they do? They ask either their kids, or I don't know. What do you hope they do?
It's a really important question, because we don't want to scare everybody and not give them anything that's solutions oriented. And when Matt's talking about these families want people to be informed so that they don't have the same thing happen to them. And the answer is talk to your kids, tell them about what's going on, keep social media, phones, and apps away from them until at least high school.
Wow.
It's the best thing that we can do, and change needs to happen at a regulatory level.
Perri, one last one for you. You've got a really interesting background in journalism, but also in documentary filmmaking, but also in public health. Your documentaries have included subjects such as the opioid epidemic, excessive drinking. Is this as big of an epidemic in your view?
I think this is a cataclysmic epidemic, in my opinion, because now these companies are targeting our children, and that is different than what was happening in a lot of these other. None of them is good, but this one is particularly
a public health crisis.
A public health crisis, no question about it.
Layer AI on top of it, and it's just terrifying. Perri Peltz, Matt O'Neill, thank you so much. Really appreciate it. Can't look away. Check it out.
Shift our focus back to Washington, D.C., where Joe Mathieu joins us. He's the host of Balance of Power on Bloomberg TV and radio. Joe, we're getting some comments from Senate Minority Leader Chuck Schumer, who made some demands, this as travel and food delays hit. Senate Democrats on Friday paring back their demands to end that government shutdown, insisting on a one-year extension of expiring health care subsidies in exchange for their votes on a temporary spending bill. Does this mean the end of the shutdown is in sight, Joe?
Boy, that's a great question. And a lot of people are asking, why didn't we just do this floor speech and make this offer a month ago? Tim, I don't know. I applaud you for carrying that floor speech because it might end up being a seminal moment here. And maybe this is, in fact, the offer that unlocks a shutdown. But I've got to say, everyone seems kind of upset in Washington today. The president's appearing angry about affordability. John Thune, the Republican leader in the Senate, was upset about the way this was handled by Chuck Schumer. But we could be in a situation where any off-ramp looks attractive at this point, knowing that they're starting to turn the screws at the FAA. 800 flights canceled today. And the president, the administration, is appealing this ruling to fulfill SNAP benefits. So the government needs to reopen. That is obvious. And to your point, it's a clean CR, as they're calling it, the continuing resolution. I don't have a date, by the way, and I keep looking for that. I've got my eyes on the floor. I don't know exactly how long the CR would go, but it would be a 1-year extension for SNAP benefits. And we'll find out if, in fact, that's palatable to anybody on the other side.
So, Joe, from the politics perspective of this, is this Democrats giving in a little bit? Democrats saying, OK, we are ready to give up a little bit.
Well, look, you're right to point that out because they were originally demanding a permanent extension. And it's difficult sometimes to know where this is coming from because not every lawmaker is on the same page. We did have some Democrats say that even the guarantee of a vote would be enough. Haley Stevens told that yesterday. Now we're looking at a 1-year extension. At some point, there's going to need to be compromise unless the government stays closed the rest of our lives. So, look, this might be what begins to turn the gears to getting this done.
All right. So, I don't know. What are you hearing that's going on in the White House? I mean, like, have you seen? It's interesting. We were talking in the newsroom how it was feeling like that this was on the Republicans at this point. Like the airline shutting down. I don't know. What's been the tone in Washington about who's to blame here? And maybe, you know, I don't know. It just has felt all of a sudden like, you know, it's shifted away. And a lot of people may be thinking about, OK, where's the White House on this? Where's the Republicans on this? They're the party in charge.
Well, that's right. And it's interesting that you ask it that way because it might be two different answers to that question. When it comes to the White House, President Trump woke up on Wednesday morning after those elections and said the shutdown and the fact that he wasn't on the ballot were to blame. And he gathered Senate Republicans in the White House and he said that we're getting the blame for this. People have decided that it's Republicans who control the House, the Senate, and the White House. So finish this, get it done, get legislation passed. The Republican Party beyond the president, many cases, at least when it comes to lawmakers, still feel like they have the moral high ground and that they are right and that Democrats have voted 15 times or whatever it is at this point to shut down the government. So you get two different answers, whether you're on Capitol Hill or whether you're at the White House. And that's why a lot of people think it's the president who will need to be the one to stand up and get this done. Some Republicans have been concerned that he'd start dealing directly with Chuck Schumer to get this done because it's not good politics for the White House following what took place on Tuesday night. They see that corrosion that a lot of voters talked about around the country.
Yeah, well, it's not just that, Joe, but it also, I think, it feels like the issues at airports ahead of the Thanksgiving holiday travel are really starting to make a difference. I mean, we heard from Sean Duffy just in your program earlier today, the Secretary of Transportation, who said, okay, 10% right now, but things could get bad as 20% of scheduled flights being cut. Is that what ends the shutdown like it has in the past, disruption at airports?
Well, you're asking the right question. I've been asking that, too. That's why I reach for airports and SNAP, because they have not been fully funded either. So you've got a world in which some people are actually starting to go hungry or they're waiting in lines at food banks. And you've got people sleeping on floors in airports. It took me 6 hours to get up to New York from D.C. the other day. Wow. And that's just an example. I mean, I'm not furloughed and I'm getting paid, but a lot of people are not getting paid right now. So, and we have to remember what the air traffic controllers are going through. Look, we're in record territory, and I just cannot imagine that this is allowed to continue through Thanksgiving. So we're going to hear different off-ramps. This is one of them. Guys, maybe we get another. Maybe there's a response from John Thune beyond vote for what we have here and we'll promise you a vote. Because another week of this, to your point, Tim, we could be at 20% capacity.
Yeah, I got to think, too, when you're at the airlines and people are, sitting there waiting online or just frustrated because their flight's canceled, you look up on the screen, it's Kristi Noem there, Homeland Security, right, talking about TSA and the importance. I mean, that's what you see. And so you start to think about, okay, who's responsible? Healthcare, why is this such a tricky issue for the Republicans?
Well, it seems to be for everybody at the moment. And the fact that we're still gnawing over Obamacare, I mean, it's been almost 20 years of this, which is pretty remarkable here. Yes, but, you know, when you listen to the likes of Marjorie Taylor Greene and even Josh Hawley, I'll take one Republican from each side, realizing they don't speak for their conferences, but they're seeing premiums go up in their states, in some cases more than blue states, which is why there's going to be a breaking point. That's the other thing, and I'm glad you mentioned it. You take these three, right? You've got premiums in some case quadrupling, you've got SNAP benefits expiring, and you've got airports that are closing. That is not sustainable. And but you know, look at what's happening at Teterboro Airport. You start hitting the airports where the private jets fly out of, and I bet you accelerate the end of this pretty quickly.
That's a good point. George Ferguson was on with us.
Yeah, he was just at a conference with private jets, corporate jets, and you know what? They're doing okay. And they're selling, right?
Yeah.
It's a hot market.
Hey Joe, we heard from Chuck Schumer earlier today, Senate minority leader, and the way that he ended his speech was the ball is in Republicans' court. Is it?
Well, for the minute it is. Now, John Thune's going to come back with something probably in the next little bit here, and maybe he's talking to him right now, where this is going to be a volley probably for a bit. They need to come up with a date. How long is this going to go? Nobody wants a full year CR again, it sounds like. So we need a date. It might be into January is what we're hearing. And then everybody can get together and figure out how this is going to work, because it's not only a matter of keeping the government open. They've got to get their heads around the Obamacare stuff. And I don't think a one-year extension will be the end of it.
Is it really in the court of the president? And I just, I was listening Wednesday, too, after the election. I think there was some breakfast. He sounded defeated. And I haven't heard the president sound that way in a long time. Does he understand that this is kind of all hurting him specifically?
Well, I think that was the moment, and that's what I was referring to when he suggested that it was the results on Tuesday night that proved that Republicans were getting the blame for this. He doesn't think that's justified, by the way, but it's time to react to it. And, you heard his frustration continue today in that cabinet room with Viktor Orban. He's very frustrated right now. He feels like he's getting the blame for inflation and for the government being closed. So I think you guys put your finger on it. At some point, the president's going to pick up the phone, and that is likely what it's going to take for this to end. Whether that takes place this weekend, we'll find out. But they are apparently going to be staying in town, so this could be important.
Speaking of putting the finger on it, you always do, Joe Mathieu, the things that we need to know in any situation when it's in and around the Beltway. Joe Mathieu, he is co-host of Balance of Power. Catch him. He's coming your way again at 5 p.m. Wall Street time right here on Bloomberg Television. All right, folks, got to mention on those headlines about maybe the possibility of a way of ending the longest government shutdown on record, you have seen markets take off. We are pretty much at our best levels of the session. Quite a turnaround, Tim, in what's been a week of risk-off trade.
Yeah, unsurprisingly, specific companies leading the way. You have airlines, also an index of bank stocks jumping to session highs after Senate Democrats scaled back their demands to end the longest government shutdown in history. United up as much as 4.8%, American up as much as 4.7%, Delta up more than 4%, the KBW Bake Index jumping to a session high, erasing earlier losses of more than 1%, up as much as half a percentage point.
You better check some of your decliners for the close, because they may not be decliners anymore.
I think I'm in good territory.
Because some of them have really been beaten up. Energy names, by the way, your best performing major industry group in the S&P 500 at this hour. That group up 1.6%, followed by materials up about 1.4%. If you're watching on TV, the close coming your way in just a moment. Tim and I continuing right here on Bloomberg Businessweek Daily.